As an investor, it's really important to be open to different opportunities. That might be in crypto, it might be in real estate, but it also might be in the stock market and around options. And today I've got a really good friend of mine, Ivan Tchourilov, here to talk about volatility and how volatility can be your friend. Everyone's trying to run away from it, but it isn't necessarily a bad thing. It can be a good thing. How are you, mate?
I am awesome. And you know that we've been friends for a long time when you can go and pronounce my surname right.
I know. I'm one of the few, right?
Everyone's going to be like, who is this guy?
I didn't abbreviate it. I pronounced it properly. And what I want to talk to you about today is looking at volatility in markets and utilizing that as an opportunity as you grow as an investor. As a amateur investor, you run away from it.
Yeah. Volatility
is something to diversify away from, to be scared of. But it can also be a leverage force, right?
Massively. We've seen, so I've spent a lot of time around options and other parts of the market, which we can talk about a little bit later. But volatility in itself is a mechanism that very sophisticated investors use to go in and benefit their portfolio. So Warren Buffett is a great example of someone who knew when to use options. And, you know, he's the guy who says, run away from leverage because it's going to blow you up. He is big in options. And there's an infamous Coca-Cola trade that he did. But at the same time, the downside of leverage is that people who don't know what they're getting into, we've seen a lot of people get into the market prematurely, blow up. And part of the reason why the Australian options market isn't as big as it is, say, in US is because that all happened about 10, 12 years ago. And we had a massive wipeout of people who were going in for leverage. Now we've got CFDs, you know, tomorrow it's crypto. If you don't understand leverage, that's where the risk comes from. But we see a lot of highly sophisticated investors, most of our audience, utilize options to protect their portfolio, to ensure that they might be seeking yield out of the market. They might be looking to use options instead of putting in limit orders below the market. So volatility, when it's high, creates amazing opportunities in the market. And, you know, and sometimes when used in the wrong way, it doesn't work very well for them.
Run me through the concept before we get into the specifics of optionality.
Sure.
Why optionality is important and how you can use optionality across a range of things before coming to actual Australian equity options.
Sure. Well, you have a car insurance or you have house insurance, right? It's the same policy. So basically, you use a standardized market driven by the ASX, and you specify the levels that you're looking at to either buy downside protection or to sort of act as the insurance company, be the seller of premium. And so the options market allows you to cover, I don't know, call it 75, 80 stocks, albeit you'd probably only be looking at the top 50 ASX stocks due to liquidity, and or the entire index. So if you've got a portfolio, you go, look, I think the top end of the market's overvalued, overdone. I want to go on and lock in some protection. You know, you could look at buying a put option to go on and protect yourself on that downside. Alternatively, if the market is, you feel like the market might go up a lot, you might buy what's called a call option to go on and get extra leverage on the upside. Now, again, there's a whole magnitude of strategies and probably outside of the scope of a small conversation, but there are a lot of upsides to using options in the right way. Just, you know, don't get drawn to the leverage.
Okay, so now let's come to Australia, and you mentioned something really interesting. I didn't actually know this, but you said the concentration of where the volatility exists is around the top 50 to 80. Now that's very different to the US.
Yes.
Right? So if I was doing options in the US or doing options in Australia, why is Australia so concentrated towards the big names, and what does that say about our market?
Well, as a percentage, I think that in terms of, you know, you go the S&P 500 versus S&P 200 here, the US is a bigger market. US also doesn't have CFDs. So as a result, their options market is a lot bigger, and they have, unfortunately, sort of what I think is a highly risky product, which is options that expire on the same day. So zero DTE options, and that's a big part of the volume. So they're basically kids punting it in their time. Now, kids punting also helps liquidity, and so thus, you know, you end up kind of having market makers. You have other people, and suddenly there's a big market of volume. The Australian market is slightly functionally different in the sense that what it has is we sort of in US market makers have to show both sides of the screen. In Australia, they don't, and so different rules, right?
Okay.
And but having said that, we have a mechanism where if you're interested in trading an option, specific option, you go request a quote request, which is digital, and then they come back with a two-way price for you. And where the big misconception comes about the Australian market is in fact that where people go in and say, oh, the Australian market isn't liquid. No, the Australian market is very liquid in the top 50. Like you're never going to have a problem executing a trade. But outside of the top 50, it starts getting a bit murky. In the US, same thing, sort of your top 10, 20% of stocks are going to have really good liquidity, and then it sort of dries down.
What's the market like at the moment? We're recording around Christmas time, 2024. We're going to release this in the new year, but without actually pinpointing a specific day or week, generally what's the vibe in the market? And you've been around a while, you've seen different market fluctuations. Still a young man, but you've seen enough cycles. What's your instinct and your gut telling you?
Yeah, it's a good question. I think that generally speaking, it feels to me that the top part of the market is expensive. On a forward PE ratio, whatever, I think it's looking extremely expensive. That doesn't mean that the market's going to drop tomorrow. Like we all have our doomsday in us go, today's the day. I'm going to wake up and the market's going to tank 5,000 points. It's going to be great. But, I think there's still a lot of money on the sidelines. I see it from broker numbers, et cetera. There's still a lot of cash. So for as long as we have passive flow like ETFs and whatever being a dominant force in the market and growing force in the market, you're sort of going to get the prop up of the top 200, top 300 stocks just due to where they're at. But what we see is that there are so many really high quality small cap companies in the bottom end of the scale. They're not promoting themselves well enough. No one knows about them. And there's highly profitable businesses that are trading at portions of what assets they own. And for most of those guys, they either get a lot better at promoting their story or they have to potentially rethink whether a listing is the right thing for them. But in terms of value, you go, do you buy CBA at whatever crazy price it is today? I don't know, $5,000 it is today? I don't know. It's something like that. I haven't seen the market for 5 minutes. It's got to be high.
Probably at 10,000 by the time we release it.
It's like last year crypto return, what Bitcoin went up 150%. Yep. CBA's probably done 300% just in this call.
But wait, so you're talking about finding value in smaller names that don't get the ETF flows.
Yes.
So exchange traded funds, passive investing, flow goes to the big names. They get expensive, they get bid up, and everyone else are neglected.
Yeah.
The ugly ducklings.
Yeah.
And is that in Australia or in the US?
Now, the interesting thing, actually, it's it's almost like we scripted this, but we didn't, so it's great. But one thing that's been quite interesting when Trump came in last time is that the Russell, which is the small cap stocks, massively outperformed. And we sort of saw a similar story in Australia. And with Trump winning, you immediately saw a rally in the Russell, gaining ground on the top 200. So
it was up like 7% on the day that he won, right?
Yeah.
Has that continued or has it fizzled out?
It has continued broadly. So a lot of those kind of rebalances take a lot longer to really, really drive through. But I suspect we're going to see something similar in Australia. I think that what we're going to... And one other sort of side thing to that is that as interest rates go up, and now it seems like they're going to hang around here, maybe go a little bit lower, but sort of be around these levels, what that creates is an opportunity for asset managers to get better dispersion of returns. Thus, potentially active investment might be back on the cards. And we'll see. I mean, there's this whole magnitude of new fund managers coming into the market, which hopefully does some... Like Regal just announced another small cap fund. So there's activity in that space.
What's too small for you and what's too big? When you say small cap, where does your kind of filter... I'm talking personal now, right? Or kind of like your own framework. Where do you draw the line here and here?
Oh, with my net worth, it's $1 billion plus as anything small cap. No, there's liquidity on the screens for anything. There's actually... just mentioning to you before, we spent 4 days in Perth seeing a lot of the small cap miners there, all the way from sort of exploration to a little bit more mature. And I think one of the companies that ended up being one of the most exciting opportunities for me is a $2 million market cap business. Now they've got to hit a few goals, but overall, like for me personally, it doesn't matter. For a fund manager, it becomes a very different proposition. You do need market cap to be at least 100, 150 before you can really get a position. Otherwise, you're sort of investing 100 grand per stock, which, and maybe owning 20% of the register at that point in time, right?
I think another issue that we've had in Australia is we haven't been successful in attracting quality listings.
Yes.
We do mining really well. We do mining venture capital very well.
Yeah.
We're probably one of the best VC mining investors,
Yeah.
right? But when it comes to non-mining, when it comes to services businesses that can really scale, technology businesses, they just don't come into the Australian market. And you and I have had some conversations in the past about listing and whether it's worthwhile and whether it's worth the headache.
Been through the process, so.
Tell us a little bit about your journey building a business, building various businesses, and kind of where you've arrived at.
Yeah, sure. Well, we started with my co-founder in 2014. We set up a little business called TradeFloor, and neither of us had any idea of what business looked like and why we were doing this. We just thought, hey, if we can get 300K in revenue, that'll be enough to pay for two of us and another third person. What do you mean there's expenses? Yeah, whatever. So anyway, we learned by doing, and we didn't even, we were self-funded, bootstrapped all the way through, and then led into a pretty interesting M&A where we merged with another company and took on becoming a retail broker. And then 2.5 years ago, we started again. And that was really interesting because we now had, kind of the entrepreneur education to some extent. And then we started going, okay, well, how would we start building a business now, knowing what we've learned from, having 125 or whatever people we had at the peak of leaving the previous business. And it's well, do we want to have a business that big? Do we want to automate? Do we want to focus on particular areas that we didn't? And when things start accelerating, going fast, all the shortcuts you took become painful kind of gaps of areas that you need to fix and never fix. So this time around, we started with spending a year designing our customer data platform. So everybody who comes into our world on any of the brands that we have and operate, we track a lot of activity so that we can go and offer a better service to them. So now what I think the biggest gap in our space at the moment in financial services is that, everyone talks about how great AI is going to be or blockchain or whatever the new word of the day is. But do you remember that thing when Bezos said internet schminternet, right? It's that. I think that there is a magnitude of technology that can go and significantly streamline operations, giving a massive competitive edge against sort of the incumbents. But at the end of the day, the thing that still stands as the most important thing is, do you offer a good product? Do you make people money in our world? And can you go and really scale your customer service experience? And if you can do those things and use technology to, reduce your headcount by 20, 30%, that's where I think that, that places will be. So anyway, it's been an interesting journey. We're at it again where we've done 3 M&A activities in the last 18 months, mostly in the last year. We've grown relatively quickly. There's another couple in the pipeline, which probably we won't talk about just yet, although they may be public, they may not be public by the time this goes live. But we really want to go on and try and take a stab at those kind of incumbent wealth manager kind of players that potentially are neglecting their customers somewhat.
And what kind of size, what kind of market share is Volatility at now? What sort of flow do you do? How do you sit in the market?
Yeah, good question. I don't know the flow. I just haven't looked at it. We just did our first raise about 2 weeks ago. Really, we sent out an email to 20 people and got the cash that we needed to get, which was nice. We were raising 5, so we're lucky to have very good supportive customers. And in terms of where we sit, we're about 2-3% of the options market. We've got access to 500,000 investors, which makes us a very good option when companies are looking to tell about their story on the small cap size. We've got just acquired a sell-side research business, which we feel like is an important step for us to start kind of using that as a due diligence piece on raising capital for smaller companies. And yeah, so we're sort of in a wide of different areas
So you're
just hustling, man. Just hustling.
yeah, well, that's the spirit, right? And just on hustle and small caps, it seems like you're more optimistic than what I am around this future for small caps listed on the ASX outside of mining.
6 months ago, maybe I would have shared your sentiment. In particular, sitting and like sitting down with a lot of these CEOs in Perth that are that typically were mining companies. I think that there is an incredible opportunity for them to get their story out there. I think that their biggest problem at the moment is that they're relying on completely kind of standard IR channels.
Boomer vibes.
Yeah, and like, don't get me wrong, it's just the audience is still the same. You still have 700,000, 708 investors in the country that are going to, participate. But I think they just haven't got the sort of their message right. They think that, if they can go in and put out an article in whatever, that's just going to suddenly lead to an increase in price. And it's like, well, no, you need to tell your story. Like, why are you doing what you're doing? And that was a pretty big, I felt like that's still a pretty big disconnect.
I think what the Americans do really well is they talk about the market, they talk about the business. It's not necessarily the capital raise or the executive or, don't tell us about the tenement, tell us about the use case.
That's it, yeah.
Of the mineral and how the world is changing. And you get that in the large caps. I mean, BHP's presentations are all about electrification, right? So they're selling you the vision, whereas in Australian small caps, it's really about how much we've raised, how many holes we've drilled, and what our samples look like. And that doesn't really inspire, your investor that's sitting there thinking, should I spread some money out?
The funny thing is with this $2 million company that I mentioned before, the CEO of that company was talking through all the different things that they've got. And then he gets to like probably 20 minutes into the conversation, he goes and tells us about how they're using geothermal energy and they've got a lot of interest, 2 kilometers outside of Ipswich or something for data centers. And their technology can basically reduce the cost of operating the data center quite a lot. And I'm like, hey,
that's the pitch.
Why didn't you start with that?
That's the first slide.
You just basically went talking about all this stuff that you're doing, completely ignoring the thing, like you could be known for the thing. And they definitely, I mean, Americans, if you look at the makeup of top tier marketing companies and here in Australia, it's always half American, half English. You almost rarely get kind of high quality Australian guys. And, they just have a better culture for telling stories.
I think the beauty about looking at the small cap space is that fundamentally these are Australian businesses. They're small businesses that are listed on an exchange with a mandate to grow access to capital. And when you're building a business yourself, you kind of put yourself in that space by default. And so my final question to you is, what have you learned as a leader? The things you can talk about and the things you are comfortable to talk about, but for a business owner, whether they're private or listed and is listening to this and watching, what have you kind of come out of your recent experience thinking and vibing going into the new year?
Yeah, look, I think the biggest thing is, and nothing new under the sun, right? But I'm really much more about doing business with people I really like, We're literally just pulling out of a potential investment on the basis of the fact that just the vibes aren't completely there. And, for me, it's been absolutely pivotal that, the guys that have started with me 10 years ago are still with me. The guys that I've met on the journey, even the majority of them are still with me on this new journey. And so, so being sort of fair in that sense and working with the guys to solve problems, I've just found that pays dividends. Now, it doesn't pay dividends straight away. As you meet someone doesn't mean that, that's going to be worthwhile at the start. But over time, sort of it avalanches in a positive way, I guess. And you start understanding how everyone works together and you just, a room of people who understand how to solve a problem is so much more than just one guy going, I know what I'm going to do.
One of the good things about stockbrokers is that they have very good intuition. And I remember one of my ex-stockbroking boss once said to me, if it doesn't feel right at the beginning, it probably won't be.
Yeah.
And I think that goes to your point. You have to do business with people that you get along with, that you can work with, and that give you that positive vibe.
That's it.
And I think it also goes into investing. You have to invest in a small cap or an emerging company where you believe in the people. They're not just a career CEO that's out the door, or a chairman that's there for his fee and is going to burn every other business. Go and look at what they've accomplished in their life. The chairman test for me was my filter. I'd always go and see who the chairman is, what they've done, and have they screwed other shareholders before, and why. So definitely comes down to people. Mate, thank you very much.
Thank you.
That flew, and we'll have to get you back for more episodes to share a bit more insight into kind of investment strategies, and maybe we can get deeper into those option strategies.
Totally. Whatever you want, man. That's good.
Thanks
for having me. That's good.
Thanks for joining us.
That was really fast.